Arlon, this evening you're looking at Main Event's Q2 financial results. Is anything jumping out at you from those results?
Yes, I'm ready to share my screen now. So just a recap for persons who may not be familiar with Main Event. Main Event was incorporated in 2004 and was listed on the stock junior market of the Jamaica Stock Exchange in February 2017. The company was founded by Solomon Sharp and Richard Beer, and it operates as a one-stop shop that provides a range of marketing, events, and entertainment-related services, such as equipment rental, graphic design, online marketing, and sound and video production. So in the second quarter, which ended on April 30th, 2023, the company reported revenues of $532 million, which was a 83% increase year over year, and a 126% increase in gross profits, which saw the gross profit margin moving from 46% to 56.9%. This led to net profits of $74.4 million, which was up over 250% from the prior period. In explaining this performance, I stated that the growth in revenues was attributed to the continued recovery from inactivity during the COVID-19 lockdown period. And notably, this is with them paying now 50% of the normal tax rate, having enjoyed 5 years of tax-free income up until February 2022. And then in the 6 months results, are you seeing the graph? Let me just make that bigger for everybody. They would have seen a 135% increase in revenues for the 6 months period to $1.2 billion, which is now at 75% of the full year revenues for the 2020 financial year. Gross profits were up more than 100% to $615 million, and net profits amounted to $192 million, which compared to a loss of $19.8 million in the prior year period. Notably,
Nice.
net profits for the first half of the year have already surpassed the full year profits for the 2022 financial year. So when we look at the performance of the stock, we see that the stock closed at $14.70 on Friday, which is just below its 52-week high of $14.90, which was achieved earlier in the week. And the stock is now up 64% year to date and 121% from a year ago. Notably, though, the volumes traded for Main Event are relatively low, and the average around 34,000 shares traded per day over the last year. And this is because the top 10 shareholders hold 93% of the shares outstanding. Going forward, we expect the company to do well. However, we're not expecting the growth to be as strong, given the fact that the first year performance was juxtaposed against a first half of the 22 financial year. We were still under the COVID-19 curtailment measures. So now the second half of the year will be now compared to a period in which there are no curtailment measures, but we still expect strong growth due to the normal events we see in the summer: concerts, parties, conferences, and weddings. So we still expect them to close the year on a high, given that the trailing 12 months profits amount to $363 million, which is more than double the $151 million they reported for the 2022 financial year.
Okay, you finished?
Yes.
Okay, I see a comment here. O'Shane said, you just finished abruptly, so I wasn't sure if you
Sorry,
had another slide. So O'Shane says, Main Event is the next stock to consider a split, in my opinion. Based on where the price is now, do you think that would be wise for Main Event? Do you think that's something they should consider?
Looking at the stock price at around $15, you probably say nominally the stock price is not high, but given the fact that the stock is very tightly held by the top 10 shareholders, and you just have a little bit under, I believe, $30 million that is available to the general public, 30 million shares that is. I think they could definitely benefit from a stock split if it were to lead to greater liquidity in the shares.
Or maybe an APO, but they're on the junior market, right? So that could have implications for them staying there.
Yeah, they would have to definitely stay under that $500 million limit for share capital. And they do also have very low debt. So there's another way they could potentially look into raising capital for any activities that they might see being lucrative for them in the future. But that is an option as well.
You mentioned that Main Event is just under its 52-week high. Do you still think that this is a good time right now to buy that stock, as profits are up 65% for the year?
The interesting thing with the increase in the share performance is that the PE ratio is currently at 12 times, which compares to the median for the overall junior market at 18 times. So when you look at it on a relative basis, it's still reasonable priced at $14.
So this is a buy for specific people. For who? Because, by the way, disclaimer, you start at the beginning. We are not recommending making recommendations on this show. Please consult your licensed financial advisor for recommendations specific to you. But in your opinion, is this
I think it would,
right now?
in my opinion, I would say that it is an appropriate stock to look for persons who have interest in taking exposure in the entertainment space, which we do know is a very critical part of the Jamaican economy. And Main Event is probably one of the best ways we can really track performance in the sector, because we saw that in the first quarter of last year. The first quarter last year, they made a loss of 40 million. And then for the 6 months period, they were down about 20 million, and then now doing 192 million. So that goes to show you just how much the company has turned the page coming out of the COVID-19 pandemic.